Ever thought about what the interest environment is going to be like in 2022? US Federal Reserve has announced that there will be a total of 6 rate hikes this year. What does this mean to consumers in Singapore? Hi everyone, this is Eunice. Welcome back to my channel. This is my first episode of a two-part series which I'll be talking about interest rates. How will the rising interest rates impact buyers or homeowners in Singapore? One thing that comes to everyone's mind will be affordability. How much installment will I be paying for the same loan amount that I took? Am I able to still afford the same value condominium or HDB if interest continues to climb further? Let me run through a case study for a same buyer with 3 interest rate scenarios. For a property value of around $1 million, taking a 75% loan amount of $750K with a 25 years tenure and loan interest at 1.5%, the monthly installment will be around $3,000. However, if interest rate is adjusted to 2.5 and 3.5%, with all else being constant, the monthly installment will be higher at $3,004 and $3,008 respectively. There is an increment of $400 for every 1% rate hike. Of course, I'm not predicting that interest will go up to 2.5 or 3.5% exactly, but these are good numbers to start with to do a stress test. The main purpose of me running through this review is so that you're aware of what it is to come. It is safer for you to factor in a high interest rate for your next property purchase. If you're very comfortable with a 3% interest rate installment, then what you're buying will be a safe property purchase. But if it is a stretch for you, then you might have to lower down your budget. Next, how is it going to impact a buyer purchasing a property? In most cases, before purchasing a house, we'll have to factor in mind an installment figure that we are comfortable to pay towards a housing loan. So say I'm okay with to fork out a $3,000 monthly installment, based on my tenure and 1.5 interest, I've calculated my loan quantum to be at $750K, which in this case I can afford to buy up to a $1 million house. But because of the rising interest rates, my affordability will no longer be $1 million property. Based on the 2.5 interest and $3,000 monthly installment that I'm comfortable with, my loan amount is now lower at $670K, which means I can only look at the $890K property price tag, or if I still wish to stick to a $1 million house, I will need to do more down payment on the property. Likewise, if the interest is at 3.5%, my loan amount will drop to $600K, resulting in a lower property budget of $800K. So what the above scenarios means is that with the rising interest rates, affordability of buyers will drop, as the same installment will no longer be applicable to the same loan amount. In fact, it will be for a smaller loan. With a smaller loan quantum that buyers are able to take up, it will directly affect the demand of the whole property market, which might in turn affect prices of properties in Singapore. From what I've talked about so far, it may seem that rising interest rates may not bode well for people buying properties now. Answer is yes and no. Yes, only if you're buying into the resale property hype now. No, if you're buying certain properties under construction. That's all from me today. If you're excited to know more about what I'm going to share about in my part 2 video of interest rates, please join me in my next episode. Feel free to reach out to me or Alex at the numbers below and comment. I would love to hear your views. This is Eunice. See you again and goodbye.